morning, ladies and gentlemen, and it's great to be here to be able to moderate this panel discussion. So as the topic has been outlined, the panel discussion is on broadening the customer base for mutual funds. I was going through some numbers because numbers tell the story, right? And the total number of unique mutual fund investors under single PAN in India are estimated to be about 2 crores. You know, given our population of 130 crores, that's just scratching the surface at 1.5%. And Sandeep, that's my opening question. You know, media channels have done a lot in terms of building investor awareness. Mutual funds have done a lot in creating investor awareness. But like I said, it's still scratching the surface. There's a lot more that needs to be done.
First of all, I think let me thank AMFI and the entire organizing committee for, I think it's an outstanding event today. And I think the timing could not be more apt. I think when the industry is at an all-time high. I think, let me pick up from the question from you. I think it's very interesting. While the industry is at an all-time high, when we look at the folios, we are still nowhere. Even 5 years back, we were 4.8 crore folios. Today, we are about 5.3 crore folios, and then investor base is about 2 crores. I think we had in an earlier session also, when Mr. Ambani also mentioned, it's interesting, 9 out of 10 people have a mobile phone. 3 out of 10 are using a smartphone. 1 out of 25 are investing in mutual funds. But I also believe in things, there are many times there is that moment that is required, for things to happen. I think if you were to look at the mutual fund industry over the last few years, I think has been doing a lot of initiatives, a lot of efforts, and especially from all the stakeholders, from distributors, from manufacturers, from media. We have been going all out and trying to educate investors about mutual funds. Investment behaviors change over a period of time. I mean, if you were to look at it, not that what the industry is talking today is very different from what we were talking about, let's say 4 or 5 years back or 10 years back. But let's look at, post demonetization, this industry has been the biggest beneficiary of money coming into the banking sector. Just to give a perspective, industry has grown 40% in absolute terms since 8th of November. 8th of November, after the demonetization thing happened. So what's been happening, I think I've always believed, anything when we do something good for the investors, we do something what is right for the investors will flock to the industry. I'm not undermining the role of all the stakeholders, but what's interesting is industry has been creating a lot of wealth for for investors. Earlier, when you were to look at it from an alternatives point of view, people had the option of bank deposit, people had the option of invested in real estate, gold, when all other asset classes are not doing well and money flowing into the banking system and there are not many other avenues to invest. I feel the mutual fund industry's time has just arrived. The Achhe Din of mutual fund actually start from today's conference, I take it. Yeah. So this is just a starting. One thing that I like to just highlight, I think since we, you talked about what we should do. I think the way what I should do is we should get ourselves convinced this industry can grow many times from here. Over the last few years, if you were to see, industry has been seeing a lot of challenges, but still the industry has been growing. And today the SEBI chairman also talked about a little about the new distributor and advisor regulation that was there. And I think if we were to go back, I think every year we have an event like this. Well, this is the AMFI's first event. There's always been a seasonal theme, just like monsoon, whether hot, cold, there is something direct, there's something or the other which keeps coming up. And a lot of players start losing the conviction that this industry can grow. I think I take it the other way around. The only thing that we need to do is we continue with the same momentum, leverage on technology, and keep expanding the distribution base. And from a media point of view, the kind of education that media is doing now, it's so interesting to see. Never before we have seen, when you open any newspaper in the morning.
I think say the Economic Times.
I was going to say, I just realized there are multiple channels, covering this. When we read Economic Times, we read Business Standard, we read ABC, what happens, what we see is there are multiple articles about mutual fund. Yeah. Yesterday, one of the business papers, had 4 articles on mutual fund, which has never happened before. So all I'm trying to say is mutual fund is the center stage now. I think what is required is now just our own conviction and execution. That's it. I don't think so that today, I see more people convinced about the growth of the mutual fund when I meet distributors from small cities and towns. I think today the SEBI chairman talked about the growth that we are seeing in B15 cities is far, far higher. And it's interesting, today morning, I read a tweet on CNN Money which said, iPhone completes 10 years this month. And had you bought an iPhone which was launched in 2007, you paid $600. But had you bought the stock has gone up by 800%. I think this is the kind of education that is helping people understand. Mutual fund industry is here to create wealth, and I think it's all in our mind. I think I don't see any challenges, I think, which will hold us back. I think it's just using technology and having the conviction which is required.
Yeah, and that's an important aspect that you highlighted, conviction, because when you look at the numbers, so fine, you have about 2 crore unique mutual fund investors, but the kind of additions that we've seen in SIP accounts has been last reported at 1.4 crore. So these 2 crore mutual fund investors are actually being very convinced and committed to the markets once they come into the fold of investing within MFs. And Lish, that's my question to you, because we talk about it day in and day out on the TV channels as well as in newspapers. It's really about convincing people to start investing and convincing them about the concept of mutual fund investing. And once that happens, then it just rolls into sort of an investment mindset.
So one, Tanvir, as you mentioned, we need to change the mindset. In your introduction in Mutual Fund Summit, introduction was Tanvir, who is interviewed Warren Buffett. Now, who is Warren Buffett? Our Guild Fund has delivered better return than Berkshire Hathaway for last 18 years. And Mr. Warren Buffett, because he's 84 years old, I can claim very proudly that in this lifetime, he won't be able to outperform Indian mutual fund manager. He has to take reincarnation.
I did ask him whether he's going to invest in Indian mutual funds, to which he said no.
Oh, because he's already rich.
He
has no desire to outperform Bill Gates, who is his friend.
That's true.
But we don't have Warren Buffetts in India.
Yeah.
We have people who are better than Warren Buffetts, and the day when in Mutual Fund Summit, the introducer will say that here is Tanvir Gill, who has introduced Prashant Jain, or who has interviewed Naren, who has interviewed Harsha.
Or Nilesha.
No, I'm a CEO, so ignore me. That's the time when we will arrive in mutual fund. Till such time we can get that confidence, I don't think so we have arrived in mutual fund. There are 2 things which we need to do. One, learn from Sunil Gavaskar, and second, learn from Ford Escort. What we need to learn from Sunil Gavaskar, every time he scored a century, he took a fresh guard so that he can go for next century. At 20 lakh crore, we have scored 2 centuries. But we need to take a fresh guard so that we can go for 3rd century and 4th century and 5th century. So learn from Mr. Gavaskar. The second thing which we need to learn is from Ford Escort. There was a time when Ford was in decline against the Japanese automobiles, German automobiles. And then the Ford engineers came together to take customer feedback to create a motor car which carries best features from their competitors. And they created a model called Escort, which became pretty successful in Ford's history. So what can we copy from our peers? Let's look at financial intermediaries like banks, NPS, insurance, who all have deepened into the Indian consumers, Indian investors. If you look at the banks, the biggest advantage for banks is the physical reach. Their physical presence connects with the customers. Of course, that physical presence comes at a cost. In the current account, banks don't give any return. Most liquid funds and mutual fund operate without any expense ratio to the customers. So on one side, there is a model which doesn't pay anything to customer. On the other side, there is a model which doesn't charge anything to the customer. So we cannot copy physical infrastructure model of bank. But we are seeing banks now moving into technology. My own parent, Kotak Bank's 811 initiative, is reaching to the customers across India. So we need to copy technology from banking system to reach out to customers on a low-cost basis. Let's look at new pension scheme. It has collected almost 100,000 crore plus AUM. It's collecting this money because there is compulsory investment from government employees into new pension scheme. Now, when we want to strengthen an industry, we need to give some compulsory allocation. Either it could be tax incentive, or it could be some amount of compulsory allocation like Provident Fund or new pension scheme. Let's copy that and request regulators to give some sort of tax exemptions or some sort of allocation to mutual fund. The third is the insurance industry. Now, if you see insurance industry, it has done extremely well in terms of penetration vis-a-vis mutual fund. That's happening because of the committed agency network and the incentivization which is paid to the agency network distribution community. Can we copy that from them? So in my opinion, if mutual funds have to grow, take the technology of banking system to reach out to customers on a low-cost basis, take the compulsory allocation or tax incentive of NPS and EPFO to get a pull, and third, incentivize distributors like insurance industry so that we can reach out to nooks and corners of India.
No, absolutely. I think the audience's applause says it all. Those are very valid points. Kailash, the other angle is also communication with the larger audience out there, right? When I was coming on my way to the venue, there was this big billboard, which was, of course, AMFI's billboard saying, mutual fund sahi hai, right? It's also about breaking through the language barrier, not making mutual fund an aspirational product, but saying that this is a product for everybody out there. I mean, an average tag for an SIP per month is actually $3,000.
You're absolutely right. One of the key things that possibly in the past we didn't do so well is our communication piece. So we were more English, whereas the consumer is not necessarily the English consumer.
Exactly.
And today we've gone vernacular, we've gone retail, we've gone B15. I think there's a large part of it which the regulator has also played in pushing us towards that area. And simple, easy communication is actually what is important. So whether it is a train ad or whether it's a samosa ad, it relates to the common man or the people standing in front of a TV. I think these are important messages to go so that mutual fund doesn't seem to be the demon that was possibly there in the people's lives. I think very important to note, going further for us and to be a little cautious, is that there is this huge number of customers who's coming in from typically the FD world. And they are now first time going to explore the mutual fund world. So we should be encouraging them to sell possibly hybrid products like dynamic equity funds or equity savings funds as a stepping stone rather than coming straight into the equity market. And that way the experience over the next 2, 3, 4 years will be good. So in case there is a rumble in the market, I think it's going to be very essential that these people have a pleasant experience, otherwise 2000 and 2008 will get repeated again. And I think to that extent, today consumers have become much more understanding of what the product is.
Yeah.
The distribution fraternity is doing an absolutely beautiful job. If you look at the flows which are coming in hybrid products is nearly 50% or more of that of pure equity products. So clearly the fraternity is getting consumers into slightly more conservative products, and that communication is going down to the last mile. And the number of vernacular newspapers or vernacular channels who are also now talking a lot about mutual funds is on the rise.
Yeah.
So I just see a huge amount of growth with simplified communication as we go ahead.
Right. Saurabh, the other angle to that is also, informing the growing middle-income group or the class of investors that, there is an element of risk, but it's really the power of compounding that helps when you're investing in mutual funds. Because I'm sure that, there would be umpteen queries related to, but, are these products de-linked from market volatility? And which is why, every time they read the disclaimer, which is a regulatory disclaimer, mutual funds are subject to market risk, they're like, it's maybe, that means, you're going to have downside risk too.
I think it's an extremely valid point, and let me just give you an example on this. I think the first point is we want mutual funds to to move from being a niche product with, say, just about 2 crore investors or 1.5 crore unique investors to 20 crores or 30 crores. If it's going to become a mass product, I think the communication needs to happen in that way. And let me give you a very classic example. When you tell somebody that this is a bank FD, what comes to his mind first? Safety.
Yeah. Secured returns. Yeah.
When you talk about insurance to any person, what comes to his mind first? It eliminates risk. I don't think we have that kind of a tagline at this point of time for mutual funds. What does it exactly stand for? I mean, it's like, that old cartoon which we had, blind people touching different parts of an elephant and thinking, about this thing. But we don't have, I mean, logically speaking, we should, the tagline should be that we are a reliable partner for all your needs, all your investment needs. Now, let me just give you an example. My nephew just passed out of engineering college, first salary, and basically he comes back and he tells me that, look, where do I invest? He goes to a bank, and the bank basically tells him bank FD, but the bank RM has not told him that there is a prepayment penalty. The bank RM has not told him that basically you are only insured up to 1 lakh rupees on the deposit. So it has not specified about any of the risks. You basically, he's seen a TV ad of an insurance product, Sachin Tendulkar endorsing it. Sachin Tendulkar was paid for it. Has that been disclosed on TV? I don't think so. I think when he comes to a mutual fund product, and exactly what you said, if that is the messaging, it sorts of puts him off. And I think it's critical now for all of us together to get together. And when I say all of us, it means the mutual fund players, the distributors, the regulators, and the RTA to go out and give the right communication and the right messaging. That this is what mutual funds is all about. If we are going to keep harping about, the negative aspects, to be honest, the discussion paper on mutual fund advisors has also been put up. But again, the sort of, the direction which we are right now taking is go and tell them what are all the negative things first, before even talking about the product.
You just read my mind. I was about to say the same thing. The disclaimer should come at the start and then say, look, you just read my mind. That's why I reacted.
So you have a situation today where F&O in futures and options constitutes 95% of trading volume on any single day. When the guy is basically buying an F&O product, is the broker actually telling him that, look, you can lose all your money? He's executing the trade. So I genuinely feel that I think there is a regulatory arbitrage which is happening in this. If we want to move from being a niche product to a mass market product, the communication needs to be simple. It should highlight the pros and cons, perhaps not the cons upfront in that fashion, because clearly, as I said, my nephew was put off. He went and put it in an FD. And that's a starting point, which should not have been the case.
Right. Nitin, what has been your experience like? Okay, great. What has been your experience like in, since you are really dealing with a class of investors that are still exploring the market? What are your key takeaways on the concerns that there are when it comes to investing in mutual funds?
No, as a thought process, I think investors that we approach are not really concerned about why we should invest in mutual funds. I think over the last 15 years, we have educated investors well enough across all distributor segments for the existing set of investors why they should come in.
But what about the new investors?
Right, only small difference that I want to highlight is, instead of highlighting risks, what I think most of us highlight is asset allocation. Moment you do asset allocation, which all distributors do, I think the risk just disappears. That's the first part. Second is, like Kailash rightly said, the right products have to come in at the right time. So for last year, when investors, somebody said a lot of FDs were coming in. That's true. Last year, the balanced fund segment opened up for investors because that gave them comfort that the risk is protected. And that before that, nobody was really into balanced funds. So now that segment has kind of opened. The third aspect that I want to highlight is, finally, every asset needs an inflection point. The mutual fund industry today is very rightly positioned. Why? I heard some time back that in India, 35% plus of investments goes into real estate. Now, because of demonetization and various checks, real estate is kind of off the burner. Second, gold is off the burner. Third, if you look at US, there's been a rally for 8 years. We've been in it for 3 years, maybe, or 2 years. And there's a lot of comfort on India's economic growth for some time. So I think the inflection point is there. Two strategies I think we would need. One, if there are, I would call every person who advises a customer a relationship manager. So to that extent, we have limited ability to advise at a RM level, which is 100, 125 customers. So can I give infrastructure to that RM for him to handle 1,000 customers? If I can give him that, it's a 10-time increase in capacity. So as a bank, I think 811 was referred, but as a bank, we have invested heavily in something called the virtual network. So we are building infrastructure where every RM can do 2,500 investors at one go. If the mutual funds work with us and build their infrastructure for ease of execution, in one flash, part of the inflection point will be reached. Because from servicing 100 customers with basic advice, you will service, I think 6 times or 10 times is not a problem. For if all IFAs, if all distributors can get infrastructure support, where they reach more customers through RMs. That's one part of the story. Second, I think as the word of mouth goes up, as more, see the other important point I want to highlight is after a long time, because the industry has been doing well, because the economy has been doing well, the fund managers are developing strong alpha, which is very good. Now, if again, like e-wallet that SEBI has introduced is brilliant, if automatic means of investments can be put in for customers with successful eKYC where they can invest in 10 minutes, which is possible in insurance. In insurance, you can buy a policy now in 15 minutes. In a bank, and maybe even outside, but in a bank, straight through, I can buy in 15 minutes. If I can do that for a new investor, that's the second point. So I don't see any concern. It's just you get technology, infrastructure, and scope of servicing increased. And I think this industry will
streamline the process.
Expand. Existing investors are already in. They are already aware.
True.
SIPs is a method. It's a slow method because every person can reach only 100, 200, 300 customers at a time. Technology, ease of investing, right product, and proper communication can easily explode this business. That's my view for everyone.
Okay, great. Dhruv, you want to add in on that? Because the distribution network has been fairly strong thus far, but what more can be done to bridge the gap in making sure that these products reach out to more people and there's more awareness and knowledge about the upside as well as the downside of investing in MFs?
So clearly, I think the numbers show, you mentioned 2 crore, investors are there with a unique PAN. And I think the number of people involved in mutual fund sales, maybe there are 85,000 ARN holders and maybe another 1 lakh EUIN, people who sell mutual fund products. So you have 2 lakh people in sales of mutual funds for 2 crore, customers. It again works out to a number of 100. And I think that's a reasonable number and that's a world average. While technology will enable you to leverage and give efficient service, I think the most important part, what is our realization, at least in the IFA community, is that besides the numbers and the analytics and the performance, I think what the investor needs is a hand-holding relationship with his distributor over the length of the investment time horizon. Because in the investment time horizon, you have periods of a bull run and a bear run. And that's the time that the investor needs to talk to somebody, especially his advisor. What should he do? He gets confused. And recently I was in US and meeting with a person in Templeton, one of the ex-CEOs of India is heading in Templeton. And he says that actually robo-advisory there is coming down. Because when a guy is confused, no robo can give him an answer. The robo is not helpful. So I think what India needs, and the outline that we have, that if we have a goal that the AUM should go from today's 20 lakh crores to 100 lakh crores, 2 crore customers should expand to maybe 60 crore investors. I think for that number of investors, you need that number of distributors. You divide by 100, you divide by 200. You use technology, you divide by 500. But you need a 10-fold increase in the number of distributors. And that fits with the government's, employment program, skill development. So how do you get this number of people? So I think the biggest challenge today is that the number of people coming into this profession, and I believe this is a very noble profession because a distributor who is an advisor, he actually brings financial stability. And we have seen a number of such cases. And I think what advertisements have been allowed today, I think he made a very valid point, that you don't allow celebrity endorsements. Why can't Sachin Tendulkar say that mutual funds are good? Because it is good. He's not telling a lie, which happens in other advertisements. I think the last 20 years' performance of mutual funds is there. You see the performance of distributors and advisors who have created wealth for their clients, brought financial stability. People have purchased houses from the mutual fund investments. I think, why can't we share these success stories? Why should there be a bar on that? So I think, in fact, at FIFA, we've been commissioned a study on investor behavior. And what comes out very clearly is that investing is more about managing investors' emotions, more than, putting the facts in the numbers. Investing decisions are, 19 to 1 by emotion and 1% is facts. So I think that part is being missed out in all this analysis, that if we want to really step up and really have the retail participate. Today, the investors, the 2 crore investors who are there, as Nitin says, for them it is the ease of investment, the ability to transact, in a flash of a second, because he's understood. But if you want to bring new investors, I think to get a 5,000 rupees SIP, the amount of effort that needs in going to that household, explaining to him why he should do it. And being part of FIFA, my members tell me that at the time of demonetization, when they did drives to encourage people to move to digitalization, the factory workers, the laborers, the maids, they were afraid of opening bank accounts. Why? Because they are scared. They feel that the money lying in my pillow is safer than giving it to a bank. So what it requires is an engagement process, and that is a personal, deep engagement process which requires a lot of time and effort. And I think the time has come to recognize that this is a noble profession. Yeah. But unfortunately, I believe there is a lot of distrust, or there is a lot of disbelief that what distributors and advisors do, I think, is not driven by client centricity. There is a belief that there is a lot of mis-selling. What gets highlighted in the press and media is one stray instance of mis-selling. But the millions of cases where, we've helped investors, that does not get highlighted. Yeah. So I think the biggest challenge is that, can we from 2 lakh distributors today, can we move to 20 lakh distributors, and what needs to be done? And if there is fears of mis-selling, I think I can assure the regulators that we are ready as distributors to upscale ourselves. Yeah. And that's what the whole profession has done, from moving from product selling, to go to solution selling. Right. And whatever needs to be done to,
You're prepared.
Yeah.
And ready to scale up.
But I think the roadmap should be clear to, encourage this mass, enrollment. So the ad campaign today is, say, mutual fund sahi hai. Can there be an ad campaign कि mutual fund distributor भी सही है?
हो सकता है क्यों नहीं? ज़रूर. Neeraj, I just want to take up the other theme. I think Nitin brought up an important aspect that, it's really about asset allocation. And Dhruv highlighted the emotionality angle to investing. If you look at the bifurcation of assets for an average household, 60% is still parked in physical assets. I was looking at the numbers. Only 2% of household assets, and I would reckon that would be cash, goes into shares and debentures. And that's less than even the average exposure to currency, which stands at 4%. I mean, people can take more currency exposure than invest in shares, debentures, and a percentage of that getting into mutual funds then becomes even narrower. So how do you think, on the asset allocation front, can people be, made more aware of the benefits, break that emotional attachment that they have to physical assets and get more into mutual funds and shares in general?
Yeah, I think it is more about educating investors. If we look at the history of equity market, normally what has happened that whenever there is a peak, we have seen large inflows of money. Like in 1992, during the Harshad Mehta time, of course, mutual fund was not there, but people used to invest in stocks. Again, then in 99-2000, during the Ketan Parekh's time, when the IT stocks were at a crazy valuation, people were investing. In 2007-8, again I know we had 52,000 crores of net sales only in the Indian mutual fund industry, and in the next year was a negative net sales. So basically, I think what has happened, what is happening is that investors are investing based on the cycle of fear, greed, and hope. So again, I'm coming back to Dhruv's point that it is about the role of an advisor is about managing his emotions, managing his sentiments. And fortunately, that is what the distribution community has been able to do. And that is where we are getting such a big amount of SIPs. Today, if you look at the SIP book, it is close to 4,000 crores. So I think those investors who are already have an advisor or a distributor who is advising him correctly, their asset allocation has already started changing. Like when we look at our book, we are obviously 80% in equity. Our entire book, more than 80% is in equity. So it is important that there needs to be someone who will go and talk. Second, when we talk about savings, it is very important, but it is not urgent, right? Everyone wants to save. It's like doing exercise. Everyone wants to do that, but it is not urgent. So there is a habit of procrastination. There are only a few people who are able to do it in a disciplined manner on their own. So this technology and all which is telling that do it on your own, that's right, but it is not an urgent thing. So procrastination happens. That's where I guess a role of a distributor becomes extremely, extremely critical. And as Dhruv bhai very rightly said, we have close to 100,000 feet on street who are talking about mutual funds, and they are managing maybe a crore family, 3 crore unique investor. If I translate it into a crore family, 100 family, each distributor is handling. Now, if we can obviously bring this number to 1 million, then you will see automatically things will happen. Because in India, a lot of revolution has taken. Aadhaar is a big thing. Now, because of Aadhaar, the transaction experience has become so simple. It's become amazing. The client onboarding has become amazing. The KYC norms have become simpler. So previously, there used to be a lot of physical signature and everything was required. Now, nothing is required. So I think we have to, all the stakeholders, asset management company, manufacturers, the regulator, the distributor, everyone will have to have the same language. I think today we are always having different language. That's what is happening. So if there is a same language, and if we are able to see the merit of the role which a distributor has played, then I think the industry can really, really grow. This can generate a huge amount of employment. Now, 1 million people, we are also talking about new employment. Today, because of technology, employment is, people are losing jobs. Now, this industry has not only a potential of, making investors rich, but also the potential of generating employment. So I think that's where one has to look at a broader picture and come out, like Nilesh bhai said, 2-3 things. If we are able to learn from the insurance or from the US and other things, then I think obviously the growth will continue to happen.
Sure. I have about 10-15 odd minutes before we get in some questions from the audience. I just want to touch upon a couple of other themes as part of this discussion. On investor behavior, Nilesh, how do you break the attachment that people have with, Indians have, with real estate and gold?
So on the gold side, I think we have to appeal to investors' patriotic feeling. When we are a poor country, we have to invest into infrastructure. And over the last 15-20 years, we have imported more gold than what foreign direct investment we have received. I mean, somewhere we have to tell this generation that please do something to change the sins of your parents' generation. By remaining obsessed with gold, we have committed more money overseas than into India's infrastructure. And there is no way we can grow without stopping this investment into gold. The second thing is that gold has been traditionally used for deploying black money. Obviously, we need to now put in place technology and systems to ensure that that black money stops going into gold. Today, every jeweler in India has a camera to record purchases are monitoring his shops. Just go to all the jewelers, pick up the recording, and find out who has paid in cash and go after those guys. I mean, these are dramatic steps which are required to ensure that we, kind of erase the sins committed by our parents' generation. On the real estate, per se, there is nothing wrong. If we see how US has grown, by creating Freddie Mae, Fannie Mae, and Ginnie Mae, they have developed real estate and they have provided home to every American. Once in a while, subprime occurs, but that cost is borne by Chinese, not by Americans, so it's perfectly fine. So we have to follow that model. I have to make my affordable housing
60%
industry.
in physical assets, and I know that a large chunk of that is in real estate versus 2% in shares and debentures. That's skewed, right?
Then we look at this way. In Bombay, 70% of people are staying in slum. Now, do I bother about mutual fund or do I bother about providing them a house which they can call home? I think it's very clear as an Indian that they should all be living in a proper home. How do I create that? I have to make this industry attractive whereby all the money which I'm saving from importing gold can go towards purchase of house. Today already government has provided concessional interest rates on housing loan. For a 6 lakh rupee house, which will give you ability to buy a nice house in a village or semi-urban area, your borrowing cost is lower than American borrower. You get it at 2.5%. So I think real estate is fine, but what we need to remove out is this gold obsession. The other thing which you didn't talk about, mutual fund industry has delivered on equity side better return than Berkshire Hathaway. The amount of cash which individuals have at their home, where they don't earn any interest, is more than almost double the size of equity mutual fund. People are happy to hold ice which is melting in their house rather than keeping into a garden where it's growing from seed to a big tree. So we also need to educate people about this obsession of cash. Take that cash out, put it into mutual funds, liquid funds, equity funds, whatever appropriate. So if I can take out cash and gold, then real estate can be actually supportive.
Fair enough. Sandeep, I want to touch upon the clear and present danger that there is with ETFs. I know it's not a big model in India just as yet, and we have a fairly decent number of mutual fund investors under single PAN. That number is likely to grow. We're going to be looking at investor awareness, initiatives like this. That's all fine. But 5 or 6 years down the line, ETFs world over are increasingly becoming very popular, primarily because of the cost that's involved with investing in ETFs. And I'll bring up Warren Buffett here again, because he's been an advocate of how, go the passive route if you are looking at investing in the markets. How are mutual funds in India prepared for that sort of query that investors will eventually come up with when the pace of investment in mutual funds picks up over the course of the next 5 to 6 years?
It's a very valid question. What's the future of ETFs in India? And I think this question comes, whenever it comes, you get very passionate responses, because in India, we've always been talking about the alpha that's been created. And I think I think we are as a house, very bullish on ETFs, and that was one of the reasons of our acquisition of Goldman Sachs AMC. The way we see things, it's a matter of time. World over, it has happened. I think it's initially, investors move to the capital markets. They use mutual funds, and then initially it's active. As the markets and the economies mature, ETFs become very prominent. I think I don't see any reason why that will not happen in India. I think we are convinced. I think the way things will happen is it will be in 2 stages. First, all new investors in mutual fund industry will keep coming into mutual fund either using the debt funds or the balance funds. These investors will mature into equity, and the equity investors, the present equity investors, they will graduate towards ETF. And this is going to be even more prevalent, especially in the large cap funds. So what happens is ultimately, the reason I've seen your interview with Warren Buffett where he touched about ETF, and the way it happens is, I think today ultimately as the price discovery keeps happening, the additional alpha that you can create, in large cap stocks is going to be reducing. And I'm convinced today, from a mutual fund point of view, it's going to be getting very difficult for all of us as asset managers to justify 250 basis point fee on large cap funds if the alpha is not generated. So I think I'm convinced that while in the mid cap, it will not be so prevalent. But the reality is, even if you were to look at all the mutual fund tables right now, the rankings which are there, in issued by various rating agencies, by the newspapers. In the large cap funds, you're already seeing 1 or 2 ETFs have already started coming in. So I am very bullish on ETFs. I'm not saying it's going to be the cost of active, but definitely you will see as investors mature. Nitin talked about a lot of existing investors are educated, and all these educated investors will question, once the alpha is not created. And the same alpha cannot continue forever. So in large cap, I clearly see ETFs challenging large cap very soon, sooner than later.
You want to put a number to that?
No, I don't want to put a number to that, but you'll see that happening. And the change in trend has started. Let's look at, let me give you, till now, till the time EPA was not investing in equities, in ETFs, it was equities, from a PF's point of view, was a dirty word.
Sure.
But today, at this point of time, as far as the limited information I have, there are more than 160 PFs which are investing in equities. So the trend has changed. So you will see this changing. So ETFs will become very significant. And again, I'm very bullish on it.
Okay, you're very bullish on it. Nitin, you want to comment on the fact that, what about the relationship between the regulator, the distributors, as well as mutual fund industry? And my specific question there is with regards to the direct plan program issued by the regulator versus the distribution platform. Since you deal with a lot of clients, what is your own perspective on how these two platforms can coexist?
Before that, I just want to reiterate digital. I think the importance of that should not be lost. Just as an example, 70% of targeted clients in the bank, which would be more than 7 million, are already on net. On most products, be it personal loans, be it auto loans, be it FDs, more than 30% penetration rates. We, through our virtual program, which is RM's handling 2,000 customers, just ran a pilot last year. 55,000 investors did it digitally with 150 crores of investments. It is the future. Yeah. Okay, so that has to be, and I think the mutual fund industry lags some of the other industries in development.
But it's going to come via e-wallet soon enough.
And it's not about e-wallet, it's about integration to the IFAs and distributors to ensure that customers get ease of operation with not robo-advice, I don't believe in robo-advice, but with the personal touch that everyone is talking, so it has to be a joint thing. On the question of relationships, I've always believed that investors are smart. If they had kept money in a FD, they would have got 7-8% return. If they are coming to an advisor, and now because of the regulator's vision, disclosures are quite good.
Yeah.
So they know that they're paying 2%. So they are going to ask, are we getting better returns than what we would have got without taking any risk? Mm-hmm. And the good part for the distributor community is because of the asset allocation and the strategy, the returns have been good. So to that extent, I think investors are smart. And there are a set of investors who are also saying that if we are smart, why should we pay fees? For them, direct plans are there. So there is a shift of certain set of investors who are knowledgeable there. And they will still come for advice to advisory outfits. The other set of investors will need guidance. And as long as the distributor, through his investments, can give better returns, I don't see a problem where and in line with the need, I think there will be a good mix, and at least our experience is whenever we approach regulator for guidance, we've always got the right guidance on how to go ahead, and we'll always look forward to that, and even the mutual fund industry gives distributors those guidances.
Okay, I'll just take a moment here to urge the audience. We would love to have questions from you. So I think I've been told to just say, we would be doing a Q&A session about a few minutes from now. So send in your questions to the app. Now, I would imagine that all of you know which app to send the questions on, so please do that. In a few moments, we will have those questions come in. And the gentlemen on the stage are the best minds in the business, so this is perhaps an opportunity that you want to avail. Neeraj, on the same very question, direct plans and distribution networks working together for getting more and more people to invest in mutual funds. How do you see both those platforms coexisting?
Yeah, I have only one aspect as far as the direct plan is concerned, because direct plan is available even to a retail investor. Now, there is a possibility of misbuying, and because of that, the confidence in mutual fund can go away. I think that is one area which one should look at. Otherwise, as Nitin rightly said, that there are people who will require advice. They will come to a distributor and take advice from the distributor. And those who are smart people in the current context, they will probably go to a direct plan. But having said that, the risk here is that sometimes when an investor becomes greedy and he wants to invest in the direct plan without understanding the underlying risk, I think that is a point which is of concern. That's the only point which I feel is of concern. Otherwise, if a sophisticated investor is there, if a qualified investor is there who is able to understand the risk, I think the direct plan should be made available to these kind of investors.
Dhruv, you want to come in on that, on the relationship between the regulator, how the relationship can be made more productive in terms of reaching out to a wider audience?
So, I think there's a lot of confusion on the relationship. I mean, as far as distributors, we find it very confusing. At times, we are told there is a conflict of interest as distributors when you deal with clients. So whether we are dealing with clients, is the client, I'm dealing with a client, or in some issues we are told that you're an agent of the manufacturer. And generally I think the regulator believes that AMFI and the manufacturers appoint distributors. So I think generally the first port of call for any interaction is with the manufacturers. I don't think really distributors are involved. And I would think that all stakeholders, if there is a more openness in terms of discussion between the manufacturer, distributors, investors, and the regulator at some frequency, if you have a sort of a round table where all opinions, and this sort of a goal, I think that if there is a vision of expansion of the market, expansion of retail, what is it that we want? Do we just want a number? Is it, just 90 lakh crores? Or is it that, I think what we as a country should aim for is that we are at about 12 to 15% penetration in terms of mutual fund AUM to GDP. Internationally, the average is 50%. And what you talked about active, this is in developed markets like USA is where the flows are moving into passive. And US is at 100% penetration. Mutual fund AUM is 100% to GDP. So almost, most households have experienced mutual funds. The per capita income is high. You're wealthy. So returns per se doesn't matter. At a large amount, like today, Warren Buffett, why is Warren Buffett, when Nilesh says he won't beat? Because his attitude has changed. He's happy with the 8 to 10% compounding for the next 50 years. He's not wanting 20% return. So I think goals change of investors over the life cycle. So I think a framework, I mean, we as distributors, we don't know. There was a plan to have an SRO that has been in the back burner. So we don't know, the manufacturers tell us that you are not regulated, but we keep seeing that regulations keep coming with something related to distribution and we are not involved in these discussions. And I think the role of a distributor is really not understood. I think what goes into an SIP, what is the effort? And we have members who do work for vegetable vendors, for newspaper vendors, for maid bars, for malishwalas. I mean, what is the effort that goes into that? I think that unless there is an interaction, and as I said, if people are allowed to share what are the success stories, what is the contribution that is done, I think there is an element of mistrust. The simple example I'll give you is he mentioned about insurance industry. When service tax was introduced, the insurance industry levied it on the premium. The customer has to pay that service tax. The whole burden of service tax is passed on to the customer. However, in case of mutual fund, this is only unique, I think, in this whole country, that the investment manager, on the investment management, the service fee, the service tax has been allowed by the regulator to be passed on to the customer, but not in case of distributors. So somewhere we get a feeling, are we doing something wrong? Are we being punished? But there's no answer. There's no explanation also given. Okay. So I think there's a great need that there is more openness and there is more discussion. And I think if we have a roadmap, as I said, if there is a goal that we need to grow at this level, what is it that you want us as distributors to do? Do you want gross sales? Do you want net sales? Do you want quality of sales? Do you want equity sales? Do you want asset allocation? I think those goals are not yet defined by the regulator, by the industry, but the onus is put on the distributor for mis-selling.
So you would want a ready reckoner, so to speak.
No, I think that's what we need to.
No, and on the subject of Warren Buffett, because he's like, the invisible star here. I mean, at $100 billion, even if he was to get a return of 1%, he'd be happy. So I think we should not keep him as a benchmark at all. That's the US market, that's Warren Buffett. India has its own secular.
Can I add something on Mr. Buffett? So one statement he made that if someone had shot down Wright brothers, so many investors would not have lost money in aviation sector. Today, he owns aviation company in his portfolio. Second, he once said that derivatives are weapons of mass destruction. During 2008 crisis and before and after, he was the largest user of derivatives, and many of his return has come because of derivatives. Third, he said that I don't understand technology and I wouldn't invest in technology sector. Today, he's owner of IBM as well as Apple.
No, Nilesh, I'm saying let's leave Mr. Buffett in the US.
Let's not give too much respect to
India.
Mr. Warren Buffett. He's a god of investment, no doubt about it.
Let's talk our market.
Let's take him in the context. And there is only one thing which is worth copying from Mr. Warren Buffett, where he made a fantastic statement. Money is not everything in life. Money is not important. But make sure that you have made enough money before you make such statement. Copy Warren Buffett on this.
Okay. Yeah, that makes sense, which is why I was saying, let's not hold him as a benchmark. But I just want to do a quick round because we have some of the best CEOs from the mutual fund industry on goal setting. So we've done 2 crore unique mutual fund investors under single PAN by this year. When we meet same time next year, what should the number look like?
I think given the technology advances, it's going to more than double. That I can say for sure. So what it'll be, 3x, 4x, I don't know. But I think there's a huge amount of difference which is there. I think enablement through technology, and again, I'm not talking of robo, I'm talking of distributor-led enablement of technology. I think it's taking leaps and bounds, the changes are huge, and I think the day, as the SEBI chairman said, if they just allow the bank KYC to be allowed, it's just a throughput that is there, and I would seriously request the regulators, some of whom who are still here, to implement it tomorrow morning if it's possible. Today is a Friday. They generally have a habit of releasing a circular on Friday. Please do the needful.
Tomorrow's GST also, sir.
Don't worry.
Maybe next week.
Just one more point. I think it's a very important point which was raised by both Neeraj and Dhruv in terms of distribution community. I think one of the key things to realize is that there are black sheep in every community. But that's just like less than 1% of the community. The community cannot be branded as black sheep overall. They're doing an absolutely amazing job. And I think if more involvement is there with the regulator, it'll really, really help in terms of taking this industry to the 60 crore number that Mr. Anil Ambani did say.
Saurabh, you want to come in with the number goal setting next year?
Look, I would rather focus on client acquisition and converting new clients and give them a good experience over a period of time. Whatever I've seen in the global markets, you have a leapfrog event. So in the 1980s, you had a leapfrog event in the US, like Mr. Ambani said, and even in Europe when the UCITS platform came in, and subsequently from there, in a 5 to 10 year period, the growth has been 10x actually. I think the time is ripe for our industry, a whole host of factors, whether it's over allocation to other asset classes, the transparency which has been introduced by the regulators all these years. I mean, you're getting everything on the web, each and every detail on the web. I think that should just give us a lot of, new investors a lot of confidence. And as I said, let the regulators, distributors, manufacturers, we all sit together, think about the whole client experience. If we take care of that, 10x is definitely achievable from a client acquisition perspective.
Suffice to say that everybody believes in the India secular growth story and the bull run in the market. So maybe next year we'll be coming in with hugely different numbers from the ones we've quoted thus far. I just want to open the house for questions. So could we have a few? Because we have about 5-7 minutes still. Do we have questions on the app? Can we have some of those questions on the screen then? Okay. I'm so sorry, I can't read that. Nilesh? Okay, so 2 to 3 drivers that can help the mutual fund industry, since you read the question, Nilesh.
When any industry succeeds because of customer satisfaction. The hotel industry didn't fail against Airbnb because Airbnb was technologically superior. It's just that the hotel industry didn't provide customer satisfaction. The Kali Police didn't lose out against Uber because Uber was technologically great company or funded with a lot of money. The Kali Police taxis didn't service customer. So there is only one thing. As mutual fund industry, as distributors, as manufacturers, we have to provide customer satisfaction. If we can provide customer satisfaction, and customer satisfaction will continue to grow.
Okay, any other questions? The audience can also ask questions. We have mics on both sides. Do we have the next question up? No, this is still the one on the screen. Okay, gentleman there. Could we have a mic, please? First row, in the middle. Okay, I'm sorry. Somebody else got the mic before. Yes, please go ahead with your question.
Hello.
Yes.
See, bringing in money is important and retaining in also important as far as mutual fund is concerned. See, any LIC policies we can go for surrender, there are a lot of process, but it is not there for a mutual fund redemptions. Your feedback, opinion on that?
Right. You want to take that up, Sandeep?
Can you just repeat that question, please?
He's asking about if insurance has a pretty lengthy way of dissuading people to redeem the money or a lengthy process for taking out money, whereas mutual funds is damn easy. Should it not be that mutual funds also create a little bit of a hurdle? That's what I assume.
No, I would actually, if that's the question, my response to that will be, I think we should try to get the best practices from all the industries, not the wrong practices. And today we have to keep working in interest of the investors. I think let's try, we have enough positives for us. So if I was to take Nilesh's earlier example of, whether Airbnb and Kali Pili, let me take another example, similar one, let's take Uber. Uber could not have done so well if Google Map was not there. Now, why I'm trying to say this, our industry has got performance. That is basically equivalent to a Google Map for Uber. So with that performance, we need to go out and talk about our strengths rather than trying to get anything negative from any other industry.
Okay, the next question.
Hi. Quick question. We've been talking about a significant growth of the industry and we've been benchmarking with others, fastest, India is fastest and so on. But the point still remains that mutual fund industry is at 20 lakh crore versus 1.5 lakh crore that the banking industry represents. And if you take the world benchmarks, the mutual fund industry is bigger than the banking industry in most of the evolved markets. I just want to understand where is it that we are failing in getting that kind of a growth which is at par with the banking industry or better?
Yeah, that's quite valid.
I don't think so failing. We are going in the same direction.
Same direction is just slower.
I'll take it, I think I am positive. So I think we were, today, there was a time we were 5% of the bank deposit. Today we are in actually more than 10% of the bank deposit. It's just increasing. If you were to look at, I remember in 2012 in one of the forums, this question was, what will be the size of the industry? And I remember when we touched about by 2020 will be 20 lakh crores. That was something a lot of people in the room also thought, this is this off the cuff. But today, many times you're happy to be proven wrong. You are 20 lakhs. Bala announced it today, in 2017. So I think directionally we are going there. If we have taken many years, maybe I think next 5 years, I think there's always a possibility we won't now increase at the rate of 10%. We'll multiply many times. So I would be actually say directionally we are in the same direction.
Yeah, and Nitin was making the point about inflection, right?
Yeah, it's also about inflection, and I think you're comparing different markets, saturated market for banking to possibly still a lot of opportunities for loan creation, etc. in India. So as long as growth opportunities remain for growth in banking, that business will grow and mutual fund will have to catch its inflection point. When saturation comes in banking, obviously mutual fund will overtake. So I think because it's a nascent industry, you will still have some time before that comes through.
But I think one thing becomes critical is, I think your earlier question on the goal that you were talking, I think you are, I think, one of the first few anchors who have asked this question on goal on the number of investors. Because typically is always, we talk about the AUM. I think what's critical is, I think today the penetration has to be increased. AUM will follow. So I think that's something I think today all industry players, all of us should look at. I think maybe I would strongly, I think if I was to make one request to SEBI is, I think we should stop disclosing the AUM numbers, disclose the number of investors, because today many times the industry gets obsessed with AUM. So I think we need to talk more about investors, new investors being added. But that will, I think, be the biggest service we can do for the growth of this industry.
Can I add 1 minute to add? So there is this Mount Everest, which everyone wants to climb. There are two ways to climb Mount Everest. One is from Nepal side, other is from China side. Nepal side is the easiest one. The China side is the toughest one. So when you want to go for Mount Everest expedition, you are weak, you are given Nepal side. If you are strong, you are given China side. So banking industry requires explicit or implicit guarantee of government of India. They have been given Nepal side to climb. The mutual fund industry has been told that you are strong people. You can climb from China side. That's why we are climbing slowly.
I'm afraid we just, sorry, please complete.
And I'll explain why. The state government securities, which is bought by mutual funds as well as banks, when we buy, we do mark to market at the market price every day. The same state government securities in the bank's portfolio, even though they have bought it at GSEC plus 75 or 100 basis point, is mark to market at GSEC plus 25 basis point. So banking industry requires Nepal side to climb. We are strong enough, that's why we have taken China side to climb. And we will climb Mount Everest undoubtedly.
Yeah, that's the end goal. Last question, 1 minute for an answer, please, because we run out of time. Will the registered investment advisor?
One, please.
Okay.
Please. Okay.
Then yours is the last question.
Okay. So there has been a lot of talk about distributors taking this industry forward. Distributors have, bought so many investors in the service they are giving. When will AMFI involve distributors in their discussions with whenever they take decisions about distributors and the regulator? I mean, chairman of FIFA is here, the biggest regulatory body, and he needs to complain that distributors are not being talked about. When will AMFI as an industry body start involving distributors in all these discussions?
Anybody wants to?
No, I think if I was to put it, so everyone looking at me,
I'm looking at everybody.
I'll take it on. I think the way we have to see is, I think clearly, I think I would not agree with that statement. And I'll tell you why. If you were to see, AMFI is meeting various distributor associations regularly. And it's a priority calendar which Kinney can share with you. So I think I would like to say, I would also request regulator to start regulating distributors directly. Why only through AMFI? But clearly, AMFI is, if you were to see over the last 10 years, AMFI has come a long way in involving distributors in various decision making. Now, is it perfect? It needs further improvement. I'm sure Dhruv and Bala can take that call. But I think I'm sure we have moved a long way.
Tanvir, can I add one thing?
Please, absolutely.
So now let me point the fingers at distributors. Do we have a common platform? There is Raipur Association, there is Bareilly Association, there is Shahjahanpur Association, there is Rajkot Association. Are all mutual fund distributors part of FIFA or FIA? So if you are going to have 100 distributor association and you hope that we will talk with 100 people, and in that 100 people, 10,000 people will have different views, that's not going to work. You unite, come together on a platform, as AMFI will be always more than happy to talk.
No, as a distributor, I want to add slightly different point.
I think I should take a quick round with everybody.
No, it's important because somewhere you have to recognize there's conflict of interest. Because on one side you are advising and on one side you want something. So in such a scenario, it's not my call, but I'm just saying that when there's a conflict of interest, so regulator has to take a neutral view. That's my.
That's exactly the reason I said. I think
that's where I think the issue is, and it's the distributors through interactions with regulators to convince that that conflict of interest is not detrimental.
The core lies in communication. Dhruv, you want to sum it up?
So those meetings and all will help.
I would sincerely suggest that AMFI or SEBI or all the whole distribution community, we should look at the Canada model. Canada has an association. Canada has an association which is like AMFI, is an association which is represented by the investment managers as well as a distributor, one body. And then they go jointly to the regulator and make representation. I think that would make life much easier because the regulator would get a uniform, feedback from both the, manufacturers and distributors.
Well, with that, I'd like to thank each one of the panel members on stage for a very engaging discussion. Thanks very much. Hopefully, we should join you next year, same time, talk about bigger numbers of investors in the mutual fund industry. Thank you very much.